Right. I I agree, Amy. I think that there are a lot of people that over the holidays try to get into places if they can. I've always equated it though, for here, our end of our semester for school ends like right
Yes.
before the first of the year. And so people have to have an address in the city by a certain period of time before that, which kind of is somewhere, I think, between Christmas or Thanksgiving and Christmas. Um, in the situation right now, I don't know if they could find a property to get into. They'd have to be planning for a while to do that.
Yeah.
Yeah. Hey, thanks everyone for joining us. We'll get going here in just a couple of minutes, and then of course our weather is impactful to some of those things here as well.
Yeah, it was always the holidays. And then also, my wife is about to give birth in 2 days and we need to close like yesterday or else we're going to be homeless and not have a place to live. And
He feels
right, always right down to the wire with those things and processing.
I started out in the mortgage industry in the relocation area of mortgage. And
Oh,
I cannot tell you how many times I'd be rich if I told you how many times I heard the moving truck is in the
it's in the
road, or
yes.
It's like, unfortunately, I heard it so much. Sometimes I'm a pretty sympathetic person, but it's like, yeah, I've heard that one many, many times before. So we'll get you closed as soon as we can. But thanks everyone for joining us on this like pre-Thanksgiving holiday version of the Last Week in Mortgage Today. I'm Faith Howard Mooney from TMC. And I have with me someone that I just always love to chat with for a while, Tony Butler, who is the president of the Equitable Mortgage Company. Thanks for doing this with me.
Thank you.
You guys have been members of TMC almost since the beginning. So December of 2016, you were there then at the company. I'd love it if you would just share a little bit about, the company and maybe a little bit about your story too.
Make sure you put the timer on me because I can just go for 3 days here. So if you don't stop me, this thing will be going through Thanksgiving dinner. But first off, everybody, my name's Tony Butler. I'm the president of Equitable Mortgage Corporation here in Columbus, Ohio. Thank you all for jumping on here. I know it's one of those weeks where you're not really sure what's going on. Also, we're going to have a thankful theme. So if there's something you're thankful for in the mortgage industry that you want to throw in the chat, we'd love to hear about it. I think we need some thankful stuff to head into this wonderful holiday. Story about me, I'll make it quick. 1998, picture it, 1998. I was in college and I got this piece of paper with dollar signs on it. It was a bill. I lost my academic scholarship. I partaked in the wrong parts of college, and then I got my first bill. Well, I called my dad and I said, "What's this?" He said, "It's a bill, you dummy, and we're not paying it." So I moved back home and never finished college. And I ended up getting a serving job at Cider Downs Racetrack, which is a horse racing place. I had a friend tell me that that's where the high rollers went in Columbus, Ohio. Anyways, I went there, and within 2 months of working there, I was waiting tables on the owner of Equitable Mortgage. And his name's Bruce Calabrese. And he pulled me aside after the dinner and he said, "If you can handle this group and you can do this, here's my card. I can teach you mortgage." Of course, I rolled my eyes. And then about a week later, I called him up, and I've been with Bruce since 1998. I started in August of 98. So this is my 25th year. Started as a loan officer when I was 20. The first group event I was not allowed to drink on because I was underage. That shows you how long I was there. Going through the years, I've handled our IT, our compliance, all of our system admins. I'm our Encompass admin, president of the company, and I still originate. That's kind of my story, and still love it every day. I'm thankful for Bruce, and I'm thankful for Equitable. It's been a great run. Still is.
Yeah. And Amy, I am also thankful for your three boys. They provide me humor. On many days when we need a little bit of humor in the industry there. Amy has some great kiddos. So if you didn't hear Tony, if you were just logging in here, pop what you're thankful for. We're going to have a thankful theme today and talk about some of the good things that have happened in the mortgage space this year as we head into the holidays. So I thought, it's like, obviously I work for TMC. I agree with you. You work for a great company. We have a lot of great companies in our TMC family. Very, very thankful for our lender members and our partners in our industry. I think we have a particularly stellar group of people that we get to work with every day. So know that going into this conversation, the spirit of this is with that and them with us. So one of the things that I think we found this year was impactful for our lender members, and we started like feeling it more, I think, after our June trip to Washington, D.C. We took 11 lender members with us in June and met with the agencies while we were there. And one of the things that I have noticed and would love your feedback on is the fact that it appears that there are people in some of those top spots at the agencies that are listening in a different way. And not just to the large lending institutions. So we would love to take credit for some of the things that have happened, because many of the things that have happened started, we were talking about them when we were there, but I'm sure they heard from plenty of other mortgage lenders. The first one was probably in May, the rescission of the LLPAs based on DTI happened. But there are many others. So I would love to just kind of hear how you've received that, in your shop and with the things that you've seen coming out from the agencies this year.
Yeah, I'd say I'm thankful for that. I'm really thankful to TMC too, because, we have under 50 employees. We don't have a voice if it's not with TMC. So I'm very thankful for this group. Like, they've learned so much. So happy to be a part of this group, but thankful that the agencies are listening and the regulatory bodies. It was evident at our conference too. The repeal of the LLPAs, talking about affordable lending, actually trying to roll out pilot programs to smaller independent mortgage bankers. Flexibility, the new one that just came out from Freddie, flexibility about some variable income, and they're holding town halls and webinars to educate underwriters on how to be a little bit more flexible in that income. I think it's great. I'm really hopeful and thankful that trigger leads will be illegal at some point. That's like my big hope, and I think we'll all celebrate a win for the consumer. I had a client that had 147 phone calls within 24 hours of me running the credit.
No.
Yeah, it's bad. So everybody's just trying to get their share and survive, but it's a little rough. But relationships too. I'm really thankful that relationships with the TMC, relationships with my staff, relationships with my realtors, and just my friends and everybody I've made, good relationships with in the industry. That's what's carried me through. Very thankful.
I'm gonna take us back a little bit more to agencies and some of those things. You mentioned the trigger leads. Totally forgot about that. I am always so sad when I hear that happens to someone older individuals and things like that who don't have exposure to the mortgage industry, so they really don't understand kind of like what is going on. I think it's very, very confusing for our consumers. So I'm hopeful that does happen as well. Nicole, thanks for putting in the chat the lift of the COVID temporary guidance. And Sean Carnes, we are so thankful for you too. You are part of that amazing network that we have. I do think it's important. We do represent primarily within TMC small and mid-size lender members. We do have some big people that have grown to be large since they've been with us, but for the most part, that is who we support. And I do think it's important when you're implementing something, what you implement within a large corporation doesn't look the same as what you're implementing within a 50-person organization, right? I mean, there's just a difference there. One of the other things that I thought of when I was thinking about this and how people are listening is, we started down this path of tri-merge to bi-merge, and we're going to implement this and it's going to be so easy. And then, we found out that, you were going to have to run for a whole year. You were going to have to run a tri-merge with different processes versus a bi-merge, and not all agencies were on the same
wave, on the same
wave length is a good word. Yeah, that's a great word. About what they were going to do with that. So potentially you were going to have to do one thing for one type of loan and another thing for another type of loan. So that's one of the things that I think everybody in the industry is probably grateful that they've taken some additional time. We're going to take some additional time. We're going to think about this and kind of come up to see. And then one of the things that just happened in the last couple of days, which I don't really know of the impact. So if somebody on here knows more, share with us what you know more. It came out that one of the big pain points this year for a lot of our lender members have been repurchases, which we hadn't seen for a long period of time. And so Freddie is, and they did talk about this when we were there in June, how they'd started to implement a new process for repurchases, but they're going to look at a repurchase alternative in 2024. Now, the only thing I know about that, so if someone knows more, share with me, please, is that it's a model that charges fees versus asking for a buyback. So when I look at that, I think about, well, it depends on what those fees are, right? Is that how you would think about that with a repurchase too?
Yeah, I just saw that come across my desk. They're actually trying to be more flexible on that because, and charge us, $1,500, $3,000 for the pain and the servicing instead of, shipping a loan back and tanking a smaller company, I think is what the process is. I'm hoping at least. Little common sense in that area would be very welcome.
Yeah. And I would think that, $1,500 to $3,000, if it was a fee in that range, that I would think would be favorable to the lender member because you probably expend way more energy in investigating things than what that cost would be. Am I correct in my thought process there?
Well, yeah, I'll still fight them, right? Like I'll still research and fight. Don't worry. I like to win. But yeah, it would just be nice because sometimes, what's the saying? You shouldn't get the death penalty for jaywalking, right? So like the agencies just have this weird view of this is out of scope. So this small thing is a defect in a loan, so take it back, but they've had 10 years of performance on the loan, right? So that should be treated different than, a true 70% debt to income ratio completely ineligible. So I hope they score these things on what they are, right? Small, medium, large, instead of just, one size fits all.
Yeah, and that's one of the biggest pain points I think that we heard is, being asked for a repurchase on a loan that is performing just because of some, minor defect that are presumed minor defect that was found, not necessarily always even a minor defect. So yeah, so I thought that was great news. That just came out this week. I guess in 2024, we'll hear more as people begin to, experience whatever it is that they're gonna test out. Obviously, our turn in our industry has gone this year to purchase volume and affordable lending. One of the things that happened this year, February 2023, is FHA announced the reduction of the MIP, which I would think would be a good thing for those consumers who are able to purchase in that manner. And there's been a lot of product development, not only related to that space, but just try to make things workable for transactions to continue to happen. What have you seen, like in your marketplace? Have you seen anything unusual in the affordable lending space or in the purchase market in the environment that you work in?
Yeah, it's actually opened a lot of doors for us. We've had some local banks and some large banks give us their CRA program. So we can actually, have these geographic areas where we're 3/8 to 0.5% lower on the interest rate. And, we get to pass that on to the consumer. The banks that we've signed up for this for, they need the CRA credits. And their one thing is they told us that we just want to see on the CDs that you're reinvesting in the client because that's the mission. Don't just pocket it and give them, prevailing rate. So we've been doing that pretty well. It's won a lot of deals for us. It's been something else we can talk about with realtors too. So the affordable lending initiatives, just trying to get everybody that fair shot to home ownership. I think when times are good, everybody takes it for granted. When times are bad, they realize it's our mission.
Yeah, I would tend to agree with that a little bit. I think that that is one of the things that having a focus on purchase and like the affordable lending spaces. I think it's brought some people back into focus with that mission. What is our real mission here? Who are we serving? I think sometimes changes a little bit when you don't have that huge funnel of, refinance volume that's flowing through. And granted, refinance volume puts people in a better position as well. So not to say that that's not the mission, as long as your kind of thought process is, how do I help the consumer get into a better financial situation for themselves? And I think we lose a little bit of that when the industry is flooded with just refinance volume. One of the things that people have done, within the TMC family, and I'm sure other places as well this year, is they've taken the opportunity of just having a little bit more time becoming leaner and more efficient in their processes, and really enhancing their processes to try to improve their organization. So when this thing turns, because we all know that at some point it will change yet again. Can you share some of the things that you've done within the organization there that have helped your team and the company remain strong?
Yeah, absolutely. I can't take credit for all these. Misty Harvey, my operations manager, she's one of the best at this kind of stuff. She brings me ideas. I mean, we're just a big family. So if you see me out there, Misty, I'm not taking ideas. I'm not taking credit for your ideas. Couldn't do it without her. But like just coaching the loan officers on the qualifying questions before they run a credit report, doing the credit bundles. So, we're paying a lower initial fee, and then once it gets to a certain stage then it cascades down to the bigger fee. Really just watching our vendors, really educating loan officers on how to use the verification services, because the verification services have gotten so expensive. Ask the clients for the pay stubs and the W-2s. Don't just go and spend, $150. And I think education with the staff on when to use the right tool has been the best, instead of turning off the tools. It's also made us realize that we don't need a lot of the stuff that we bought, right? We had all the toys in the world when you can afford them. And then you look down at it, you're like, wow, nobody's logged into this website for 7 months, and that's $2,000 a month. Kill it. So it's let us get a little bit better on what our wants versus needs are as an organization.
Yeah, and I'm sure there are many others and some people on this call. If you found those things, we'd love to hear kind of like what you found within your organization, those ideas that have been helpful. I think overall, as an industry, both you and I have been in for a while. I wish I could say that I had come in 1998 and I was 20 years old. My story is a little bit different than that one. But we've seen all kinds of things. And I think one of the things that this market does is it also makes us focus on our employees, and our employees become, I think, better employees. They have a more creative mind because they have time to, right? They're not in the trenches every day just trying to make it through the steps of getting a transaction to close. But I think all of those things, especially related to the LOs and the LOs understanding and having visibility into when is the appropriate time to do this, overall in the long run is also going to save companies money, because they've invested in teaching what's appropriate and not just like push it through the system and then have fees that are never realized, or are you're pushing something through the system that isn't gonna, it's too soon, or it's not going to happen, or that type of thing. And so I do think that there is something to do with that. It sounds like you've done a great job with your employee base there in kind of making that transition as well.
There's another thing I'm kind of thankful for. I'm kind of thankful that the seller is losing some of their power. So it's really bad in the real estate market when the buyer has all the power or the seller has all the power. We need both the buyer and seller to both be equally motivated to close that transaction. And we're seeing that buyer power kind of soften up a little bit, right? Home inspections are getting done. Repairs are getting done again. The buyers are going to be in a better place, and that's good for everybody.
Yeah, for sure. That is. Now, if we could just find a few more homes out there for people to purchase, I think that's one of our big industry challenges. for the year. But I will say this week was the first week I have seen this in I don't know how long. And it's kind of a weird time because I'm in Minnesota, we slow. You know, over the holidays, except for people that are trying to move kids into school districts, I would say, because of weather, because of a lot of things, it's just the start of kind of the slowdown. But for the first time in months, I saw agent signs in yards here this last week. I saw 3 of them and I was absolutely shocked. It's the first time I've seen it. And I mean, I can't tell you how long. So have you seen some of that in your area as well? That there may be a few more houses out there for people to purchase that are visible?
I wish. We're still, like, I was just, on a call right before this, 25 offers on a home, Columbus, Ohio, because of Intel, it's insane. So there was 25 offers on this home and it went for $60,000 over list. And the borrower that we had was $30,000 less than the top offer. So we're still feeling the inventory thing, but then again, it depends on where the price point is, right? So that just have to be a really hot one. But I'm hoping we're going to see a lot more inventory coming online. We need it. We need people to start selling some of their investment properties have tripled in value. Take the money off the table. Let a primary residence get in there. Let a homeowner get in there. So we're hoping.
It's interesting because not only is it an unusual time for us to see a lot of those signs here, we just traditionally don't. But the other thing is these homes I'm wondering if I would love to know the story behind them, but that's just my brain and how it works. It's like, why are you moving? Why did you move? But there were a lot of large homes. All 3 of them were, like good size, probably 4,000 square foot homes that were on the market. So it's like, are people selling because they're trying to capture what housing is worth right now, or potentially someone downsizing? I guess you just never know the whole story, and I would always love to, because that's just how my brain works. But I thought that was kind of interesting to see those signs out there. It's like, maybe this is a really good sign that this is happening here where it's colder and normally doesn't happen. One of the other things that I think that I'm most proud of here is how I feel like in times like these, it's like I feel like we have been a better resource for people. Obviously, people have more time to dig into things. Some people are wearing a lot more hats than you're used to doing that. That's your normal. When you have, the smaller company and there are 50 of you, you're used to wearing a lot of hats. You mentioned many of them at the beginning. I can't believe you're still the Encompass admin that works with all of those things.
It's on the list. It's on the list to get rid of.
Exactly. But I feel like that in times like these, it also supports more of the thought process of that we're stronger together as a group of people, and we're not in this just, all alone or by ourselves. And I feel like it's allowed us to be great resources for the people that are within our network when they need something. But I think that it's allowed people to rebuild or maybe have deeper relationships with people than what you've had before. Is that kind of your experience, what you've experienced there as well?
I think, yeah, absolutely. Even internally, like I'm seeing, my operations are seeing the downturn and they're actually asking, how can we help? How can we help market? And, they're trying to chip in with marketing ideas and spend time with loan officers. And it's great to see the 2 sides, right? Front of house, back of house, restaurant background. That's how I refer to it. It's great when they get together, right? Because it's not always that way. But even with realtors, the relationships go deeper, right? Your referral partners, you just spend a little bit more time with them, talk to them, and the human level goes a long way. Definitely deeper relationships.
Yeah, for sure. I feel that. I feel that within the network that that people have. I always say it's all about the people. It's always all about the people because that's what I believe. But I do feel like it has allowed that to happen. Bernard, thank you, Bernard, for being on today and for putting the comment in. But while there were 6.9 fewer homes on the market year over year, October's inventory grew 4.6% month to month to continue a streak of monthly increases that began in April. So maybe we're seeing, maybe some of that is truly what I'm seeing is coming true. I think one of the things that we've had to do this year, and maybe it's survival mode for a lot of people, is you become a little bit more creative in how you think of things. You don't just go through the day in the same standard way that you always went through it before. So I think that one of the things that I've been kind of surprised about, and I'd have to say there's been no easy solution for housing not being on the market. But I think people are kind of looking at housing a little bit differently than they did before, from alternative types of housing and some of those things. I'm interested in seeing if you're seeing anything like unique related to either, you know, people converting housing, different types of buildings into housing, or anything like that, if you've seen anything unique land across your desk.
I've seen an uptick in barn dominiums, believe it or not, the barn dos, right? And they're really big here and like in the outskirts of Columbus and central Ohio, and they're really cool, right? You have your workshop, you have your garage, then the second floor, you have your living space. We're seeing a lot of those. We're seeing log cabins up in Delaware County and stuff. We've got Hocking Hills, you know, to the south of us. So that's kind of starting to creep. That's going through a big explosion. I've been hearing tiny homes, container homes. I don't know how to finance those homes, but I think about them. There's a lot of, you know, affordable lending, trying to be creative. It's hard to build, you know, something under 250,000 right now. So we've got to figure that out. We've got to do a better job.
Yeah, that's the one thing that in this particular market I've noticed, the escalation of the cost of homes is huge. We don't have anything that starts with a 2 anymore, and you can barely find anything, even, you know, a townhome that starts in the 3s. It's really escalated. But some of the things that we're seeing here in the cities, and then that I've read about in other places, is transition of office space is something people talk about a lot. I'm not sure how much of that is really converts that way. I read something earlier this week that the percentage of an office building, or the percentage of office space, not an office building, that can be converted more easily into housing is only 15% of office structures, because of how they're built, have the ability to do a conversion into housing. One of the neat things that I read, and I can't remember if it was New York or New Jersey, it was somewhere where commuting was still happening to a larger degree than in some places, but developing housing, affordable housing near transit for people, and doing, you know, a reduction in the cost of that housing for a period of time to try to allow people to have a leg up in that particular market. Here, one of the things that we're doing that we have never been good at before, the town that I live in until 5 years ago, I don't think had any multifamily housing, period. It was very, and trying to think of what they call that, where it's like not in my backyard, NIMBY, not in my backyard. NIMBY, there was kind of the thought process of, oh yeah, you should build more of that, but just not here. Which I'm embarrassed about, but it was the reality of the situation. And I'm seeing municipalities kind of revisiting some of those things to get people into their communities. So
You
yeah,
you just made me think of something else to be thankful for. Fannie
yeah,
Mae now allows 5% down on an owner-occupied 4-unit. So that is a good, you know, good thing to be thankful for. We're seeing a lot of uptick in requests for that too.
that is a great one that I totally missed out on. That is a great one that I totally missed out on. There are things like that that are going on everywhere, and I don't think any single one of them we've seen be like a game changer, right? I mean, you know, that's totally just changed the world, but it's like that thought process of incremental and little baby steps. If you can get, you know, 5 or 10 more people into a house in the next 6 months that would not have been able to, think of the impact on those families. So yeah. And then the thing,
So you mentioned something else about the affordable housing. I forgot all about it. Downtown Columbus, there's this skyscraper, well, Columbus skyscraper. I think it's 40, 50 stories. It's a Chase building, and they're actually making that all affordable housing with some commercial. So there's one, bright spot there. It's not getting leased out for commercial.
Yeah, in a market that needs housing. I mean, Columbus is one of those places that people I think are really struggling to find housing in Ohio. So yeah. The other thing that I just wanted to mention here at the end, and one of the things that I love hearing is the fact that women are kind of becoming a force in home ownership. And people haven't recognized that for a period of time, but you start to see a lot of that. More single women in 48 of the 50 states, there are more single women owning homes than single men. And that's, you think about that from the perspective of prior to 1974, women could not purchase. So 1974, women could not purchase a home without a man signing with them.
I didn't even know that.
Yeah, so that was like not that long ago. And now, women are being recognized as like a good market for home ownership, which I think is just a big shift and something that I am very thankful for. So yeah, we're at the bottom of the hour. I knew it would go by super fast. It always does with you. If you haven't heard it and you want to hear Tony's whole entire story after today, go out to YouTube and then join us on YouTube. As far as subscribe to our YouTube so you get notifications of the things that we're doing and that we post out there. But find Tony's Inside the TMC Family interview with me. It's one that I remember, and it was one that was like super fun to do. They all are, but yours is just the greatest. You have a great story, a great outlook on things. You run a fantastic company that we really appreciate, and appreciate you hopping on to do things like this with us. So thank you for doing that. I hope you all have the happiest of Thanksgivings, and join us next Tuesday at the same time. Thanks, Tony.
Thank you.